Inflation is all about prices rising, and that can really impact individual companies. It certainly impacts us as a consumer. So if we're looking at companies and we're looking specifically at stocks that we might want to invest in, what types of stocks or what types of sectors might be a better place to invest in during periods of rising inflation? We're going to take a look at that coming up on Investing Education with Mr. B. Welcome to the channel where we help you to learn fast so you can become a confident and successful investor. If that sounds interesting to you, do consider subscribing. Okay, inflation, rising prices. What stocks can do well? What stock sectors in particular can do well? What types of sectors might you want to be looking at? Healthcare, energy, technology? We're going to take a look at that, and I found some interesting data around that I'm going to share with you. The key thing about when it comes to inflation, when it comes to companies and stock prices, companies that can pass those higher costs onto their customers, you and I, as a stock and as a company tend to do well. They're able to protect those profits. Companies that are not able to can really struggle. So I found this interesting article here, and we're going to take a look at that and that data around it. All right, so the article's from Hartford Funds, actually, and did a in-depth research. I'll have the link there in the description below. But the article and the data is around which equity sectors can combat higher inflation. So it's very interesting. They got some interesting charts. So let's take a look at that. One interesting chart was showing how well stocks. I mean, stocks are a good inflation fighter. They tend to average a 10% return year over year. So it's much better than like bonds or cash as far as overcoming inflation, which typically inflation, federal governments and stuff want to stick around 2 or 3%. But we are in a period right now of much higher and faster rising inflation. So we're right here on this graph where it's high inflation and rising versus low and rising or high and falling or low and falling inflation. You can see that stocks do well in all these categories. And this is looking what percentage of the overall stock market is doing well. So in this, it's during low inflation, but it's rising, 90% of stocks tend to do well, right? So this is like high inflation and rising, 48% is the tougher one, right? So what stocks, fit that bill? What sectors can do well in these types of environments? And that's where the big basis of the study was looking at. And we're going to look at that closely so we can kind of identify what sectors you might want to look at within that broader inflationary period. And so here's a graph, where it's showing, this happens to be for the United States, but it can be applicable, I think, in all sorts of parts of the world. But looking at equities or stocks, that performed or 3% on average in rising environments in terms of stocks, over 3% inflation in rising environments. And this is looking backwards from 1973 to 2020 and averaging that over 12 months. And looking at their return percentage, as far as the percentage of time that the stock had positive real returns over a 12-month period, real returns being that they're factoring out inflation. So really what you're looking for is this top part here, as far as what percentage of the time do these stocks generate good positive returns. So you want to be over here in this right quadrant, or in the left quadrant is fine too. You don't want to be below as far as just general thinking about sectors. Individual companies can always have individual success, but if we're looking at broad sectors, this is where this comes into play. So you can see, companies are able to really pass on prices very easily is over in this upper right category, and these are things that people really need. One that does very well and tends to do well is energy. And really we're talking about oil and fossil fuels, possibly like solar and things like that. But really, historically, it's all been about, you need to heat your home, and things like that. So they're able to, and you need gas for your car. So energy companies are able to pass on those prices more. Equity REITs are stock real estate investment trusts, right? So these are folks that own real estate. So think about if you're a company and you own apartment buildings, you can raise your rent. You might be experiencing that where rent is getting raised each year, and it can be raised at a faster rate. It can be raised at a faster rate than inflation going up. So when inflation rises, that can put a real strain on owners that it might be in some kind of either a variable mortgage or in something where they're in an apartment building or a company where the leases can be raised. Another one is consumer staples. So those are things you really need, like food is a consumer staple, as opposed to you'll see consumer discretionary, something I don't necessarily need to buy. But staples are things that you always tend to buy and need, like food. So when we have rising milk prices or rising meat prices, rising uh, food like vegetables, fruits and vegetables. Those are prices that can be passed on because we all need to eat. Other ones that do well are things that we still need, like healthcare. Still need to go to the doctor. Utilities, you need that electricity turned on. Though I figured, utilities would do even better. I figured they were going to be over here. But one thing in the article talks about this too is utilities are regulated by their governments, and so they're able to pass on prices increases from inflation, but they're not able to really pass it on an even higher rate or even gouge you or something like that because of that regulation. So it keeps them in check. But they do pass on those higher prices. Other areas that do well, in terms of related to inflation, are things like precious metals. In fact, gold and mining. These would be stocks that mine like metals and mining and gold. Gold in itself has always been a safe haven. So when inflation rises, people might look to invest in gold. So if you want to stay in stocks, companies that do things around precious metals might be interesting. Around in mining around cryptocurrency could be interesting too as well. Cryptocurrency is still a little too new to show up on this kind of stuff, but that might be a hedge as well potentially. Now, if we look at the bottom, this is the companies that tend to not do as well. Some are close, like industrials or manufacturing. Can you raise your prices on what you're manufacturing, maybe an automobile or something like that? That's more discretionary. But, your manufacturing costs, can you pass those on? So if your raw material goods are more expensive and that you're used to manufacture product, can you pass it on? In many cases, you can. It doesn't get above the 0% line, but, you're getting closer. Financials surprised me. I thought that would do even better. I thought it would be more above the 0% line. Again, passing on higher fees and things. But, the studies are showing it is below as far as the number of companies that are successful. Now, one thing that where financials are helped is being tied to the inflation fighter. One of the big ways to control inflation by big governments and their central banks is to raise interest rates. You might be hearing like, oh, we're going to control inflation by raising the interest rate. So banks, in particular, and many financials, do well in a rising inflation rate, rising interest rates, because they're able to pass on and charge even more and have a bigger spread of profit when the interest rates are higher than when they're at very, very extreme lows, like we've experienced over the more recent time period. But now we might be seeing, in order to combat inflation, we're seeing interest rates rise. So that might help certain financial companies, particularly banks, to look at. Telecommunications, you still need your cell phone, right? But that, is closer to the line. The overall U.S. equity market they're showing here. If we look at the ones that really tend to struggle, well, the worst here is mortgage REITs. This is real estate investment trusts that own paper, own mortgages. So if they own the actual paper and interest rates and inflation's higher, they're not able to pass it in. They're locked into these contracts. So they will really struggle if they're owning paper versus owning property, like and getting leases and rental income like these equity REITs up here. The other one is information technology. Again, you can always have individual companies that can be a real high tech or a real growth oriented thing. They're in an emerging area, for example, and they can still do well and overcome. But in general, based on the research, technology companies tend to suffer. And we're seeing that a little bit here in the recent period here, where technology did great in 2020, did not do as well in comparison in 2021. We'll see how 2022 shakes out as far as how inflation might shake out, but they tend to not do as well as a sector. So something to consider, particularly if your technology stocks have really grown. Maybe it's something you want to pare down and take a look at. And the other one is that doesn't do well is consumer discretionary. Those are things you don't have to have, but you might want to have. You might want to have that brand new car or a fancier car, or a better example might be a piece of jewelry, expensive piece of jewelry you can do without when times are tough or when inflation is rising, putting a crimp on other parts of your lifestyle because it costs more to heat your home, it costs more for like leases and rents, it costs more for food, it costs more for utilities. Everything is rising in terms of prices. So the point of all this is to understand that we're kind of a little bit newer, and for many of you it might be the first time you're really in a inflationary environment. Your parents, your grandparents might remember the 70s where inflation was really rampant, in the 80s where it was really high in the early 80s, and trying to get that under control by dramatically raising interest rates is what happened in the 80s, and then they pulled that all the way back, which helped fuel the stock market booms coming up in the 90s and beyond. So it's a very interesting time we're in here, in addition to having pandemic and all sorts of stuff going on. Oh my goodness, we want to live in interesting times, here you are. So just consider this. Again, this is not me being your personal advisor recommending anything. It's just something as far as an educator to think about when you're looking at your overall portfolio and where you might want to be investing in terms of looking at specific stock sectors, particularly if you believe that inflation might be continuing to rise. Some sectors overall tend to do better than others. So some things to consider. Take a look in the description below to look at the article and click on the link to really read it and understand it in details, because I went through it pretty quick here, but really start understanding what they're kind of saying here, because I think it's some very interesting data that they came up here from Hartford Funds actually. So which equity sectors can combat higher inflation? Check out that article. With that, that wraps up this video. Go check out some of the other videos and do consider subscribing. With that, I wish you all the best in luck, whether inflation's up or hopefully while inflation's coming back down.